Welcome, everybody, to Wall Street Reporter's Discovery Day live stream, November 1st, 2023. We are back with Appia Rare Earths and Uranium. And again, this is the program where we bring you those stocks which we believe have that multi-bagger upside potential, companies that are going after massive market opportunities at a key inflection point and with multiple catalysts. And of course, we already know that Appia previously increased 10x, over 1,000% last time they were on our program just a few years ago, and looks like they might be. Again, we're not saying we can't guarantee the future, but it looks like history might be about to repeat. Tom, welcome back to the program.
Thanks, Jack. Appreciate it.
Tom, so the market is obviously very excited about your latest drill results. This is the Rare Earths project in Brazil. So I'm looking here. You got 24 meters of mineralization averaging 2.72% of rare earths, which is apparently an incredible number because the stock was up 25% yesterday on this news, while many stocks were not doing too well. Big volume. So obviously the market likes this. Can you explain to our audience the significance of what these numbers mean? And maybe we could also pull up this on your website for context.
Please do, Jack. Yes, yesterday Appia announced this extraordinary assay results from our PCH project in Brazil. It's one of our holes, hole 63, that basically intersected 24 meters of mineralization from top to bottom, from surface to 24 meters, with an average grade of 27,188 parts per million, or 2.72% total rare earth oxides. To give you some context, the average grade we had on our first 17 holes was 1,566 parts per million. So this is around 22 times better the average grade of our deposit, and about the same or more of another deposit that is in production, where it's going in development and be in production very soon, that they have 1,200 parts per million per ton. Extremely high grade. We're very excited to see that there is this type of high grade. And also what's important here is that the entire hole averages that. So basically from top to bottom, we have roughly 27,000 parts per million of total rare earths. And the hole did not stop in mineralization. At the last meter, we're getting the same numbers. And we stopped there because we intersected the water table. And because it is a reverse circulation drill, we don't get good samples below the reliable samples below the water table. So we stopped there. So we're going to go back and do some diamond drills to see how far down this mineralization is still going. But to my knowledge, Jack, and I stand to be corrected, I have not seen this high grade from any other deposit or project in the world when talking about these grades for ionic clay type projects. So this could be the highest grade drill hole from the industry here.
Okay, so just for a little context. So you're getting this drill again, and it's only, we should repeat, look, we're doing a long drilling campaign. Obviously there's a lot more going on, but this single drill hole is indicative of what could be some incredible potential. Now you have 27,000 parts per million of rare earths in this hole. Now for context, the mine that's in production, what kind of grades are they getting?
The mine that is going into production, it's under development right now, and they have announced that they'll be producing early next year, is 1,200. The average grade that they have is 1,200 parts per million per ton.
So you're getting roughly almost 20 times, basically roughly 20 times with the grade they have.
Over 20 times of that. And
okay.
What's also important is some of the elements, when we did the analysis, they were over limit, which means we're reassaying those because they reached the limit, and we got to do another test to see how far higher than the limit are, and we'll be reporting that too. So there's potentially the 2.7%. It's higher. The 27,000 ppm could be higher. We'll know in the next few weeks, basically.
Now that you explain it in plain English, now we can understand why the stock was, rocketing 25%. Again, it's a lot in this type of market. Incredible stuff. Now, I just want to maybe show also for the context. So we got these are the kind of the numbers, right? Do you want to explain what?
Well, let me go over the numbers, Jack. If you can give me the numbers again.
Here we go. You want to show this or this?
Yeah. Let's see the numbers that you showed before. Just the
highlights. The highlights.
Yes.
Okay. Let's explain the highlights here.
So what's important here? The 27,000 parts per million. It's over 24 meters as we discussed, and it includes over 6,000 parts per million, or 6.3%, 0.63% of magnet rare earths, which is the neodymium, praseodymium, dysprosium, and terbium. That those are the rare earths that in high demand because they're used in manufacturing permanent magnets which are used in electric vehicles, drivetrains. We've got over 6,000 parts per million in the highly demand magnet rare earths, and including within that we have about 1,369 parts per million, or 0.414% heavy rare earths, which is, again, those are very hard to find. Not many deposits include heavy rare earths, which is again in high demand. Within that 27,000 parts per million is the most in demand rare earths, the magnet type rare earths and the heavy rare earths. And it's extraordinary. When we acquired this project back in July, we knew there were rare earths there, and we were expecting, based on some previous auger drilling that our partners had done, about 1,200 parts per million. On the first 17 drill holes, we averaged 1,566 parts per million, and within that there were high grade, like sections with 3,000, 4,000, 5,000 parts per million. And now we're overly surprised. We couldn't dream that we're going to get 27,000 parts per million and more. And what's more important, Jack, if you show me the map within the news release, if you go down.
Okay. Here we go. Oh, here we go. Sorry about that.
Yeah. Okay. So if you can zoom in a little bit here, this drill hole, this 63, is just west of the creek there. That part of the property, the west part of the property, was not part of the original target 4 area. When our geologists went down there and started drilling, we looked at that area and we said that this is an area with high potential. We did our first hole is 27,000 parts per million there. So which means we increased the size of this potential zone from initially we thought it would be about 1.3 square kilometer, and now it's about 1.89 roughly. And we're based on what we've seen on the ground and this drill hole, we have another 15, 16 drill holes in that area that will be expecting results. So we're expecting a high grade zone or a higher grade zone within that additional area. So what else is exciting also is on the east side to the north, where we reported the 17 drill holes, the average grade, the average depth was about 13 meters. The mineralization is 13 meters deep. And on the west side here, this drill hole, we're getting to 24 and potentially more meters, which means we've got exciting high grades, and we've got double the depth of the zone, which will increase the mineralization, the potential resource of this project. It is exciting because we got high numbers. It's exciting because double the depth of the width of the zone, and it's exciting because we added some new area to the initial zone. So this could be the way it feels like we've got a world-class type project. And in the next few months here, in the next few weeks, the next few months, we'll know more because we start getting a lot of results. We drill 147 RC holes. We only have reported 17 in this one here, 18. We drill 70, 80 auger holes and one diamond drill hole, and we're still drilling with auger drilling. So we got a lot of information to come, and we think that there's a lot of potential here. Could be a premier world-class type resource, and we couldn't be more excited.
If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x. Okay, bottom line is the drill results you have right now, they've all been above expectations. The latest result is like 20 times the grade of some of the commercial projects there. There is a possibility, again, like you're saying, that this continues. If there's this consistency there, you might be looking at world-class deposit for this rare earths. Now, for anybody that doesn't know, can you explain to our audience, anybody that's new to these markets, what are the applications of rare earth minerals for uses in technologies, whether it's electric vehicles or mobile phones, other technology applications? Because really, this is rare earths. I'm calling it like the building blocks of the modern age. Rare earth minerals really are the critical building blocks of today's technologies. So explain to us some of the applications, the market demand, everything going forward.
The answer to your question, to the first question, was way above our expectations. The results that we got so far, it's beyond our initial expectations. So we're quite excited with that. Now, in terms of the rare earths and the uses for rare earths, what we know right now, there is a world transition into clean energy. So it's a kind of a new industrial revolution. It's a new revolution going out there. The world wants to move from fossil fuel burning to clean energy, which is electric vehicles generating power, electricity from electricity. And so the rare earths are needed because, for example, for electric vehicles, the motor for electric vehicles, they need magnets, a heavy, very strong magnet, permanent magnets, because you can have a huge magnet on a car, but then it's a question of weight, it's a question of space, and also power and distance. With this neodymium, praseodymium, they're building blocks for the permanent magnets, and they're very powerful magnets. They're also, so they can reduce the weight of the car. They can drive, the cars can drive much longer, and also they can build or manufacture magnets of any shapes or any strength, and by having powerful smaller magnets, you're reducing the cost of cars, because you need less lithium and cobalt and nickel for the batteries. So you've got a powerful magnet that you need smaller batteries. Now you also have the heavies, which is the dysprosium and the terbium, and those, when used with permanent magnets, they increase. They can the motor, the drivetrain can withstand higher temperatures. So this is what we needed. Now, in addition to the electric vehicles, which everybody's thinking that in the next few years, people will be driving more
Sure.
electric vehicles worldwide. But it's also they is used in wind turbines, generating electricity, especially in offshore wind turbines, because wind turbines are a very tall structure, so you can have a very heavy magnet over there. But it costs them a lot of money to maintain wind turbines in the ones, especially that are offshore. So there's a lot of cost savings in maintaining turbines over a life of the span of turbines of 20, 25 years. They're also used in telephones, mobile phones, high-tech applications. They're used in military applications, in aerospace. The F-35s don't fly without rare earths. And what's also crucial is the supply of rare earths. It's controlled by China. 80-90% of the rare earths are supplied by China. And what has happening is China prefers, and I don't blame them, they don't want to sell rare earths. They want to sell magnets, or they want to sell electric vehicles. Whoever controls this critical materials, this is why everybody wants to see the governments of the Western world. They want to see some dependable supply of these critical materials, including rare earths, from outside of China.
You have it. So you're in Brazil, which is a pretty stable country overall. You know?
Brazil is very stable, and we're excited down there because it's
mining friendly.
Mining friendly. They've got some new laws there where, because this is critical materials, they've got to give you an answer on an environmental license within 6 months. In North America, it takes a lot longer than that.
A couple of years in the U.S., right? Usually,
at least. Now, what's the other thing? So all this, everybody's projecting that the demand for electric vehicles, high tech, AI, everything is going up, and therefore there's going to be a shortage of supply of rare earths, and the prices are on the way up. But more importantly, we can live with the existing prices. If you have the great and good production costs, you can make money even lower prices. So the other thing why we're excited about this project, Jacques, is this project has very little radioactivity. You can get permits easier. It's within 30 kilometers from a mining town, and you have roads, we have power, and we have water in place. And because of these rare earths are containing in clay, and the clay are within the top 10, 20, 30 meters, you can basically scoop the clay, leach it. You can basically do some leaching, take the rare earths out, and deposit back whatever is left into place. So you don't have a lot of tailings to deal with for years. And also what's more crucial is because it's an easier mining operation and a processing operation, the costs are much lower. The operating costs are lower, and also the OPEX, the cost to put it into production, it's a lot lower than a hard grade deposit. So there's a lot of factors that come to play. And again, seeing this kind of results in the right location with the right mix of rare earths, with not a lot of radioactivity, it makes us very excited.
Okay, potentially this could be a really exciting project. Now, I want a quick question. We got an audience question here. Dimitri is asking, what are the processing options? How is the infrastructure nearby processing in where this is located?
As I mentioned, the property is located within 30 kilometers from a mining town, and there's a couple of mines there in production right now. We have good relationship with the landowners, and we'll also have good relationship with the area politicians there, and then the people. Everybody wants us to be there. Basically, they want to see development. Now, in terms of the terrain, it's a farm. They're raising cows basically there, right? So we can drive our car. The workers, the drillers, and our geologists, they live at home in town or in a hotel, and they drive back and forth to work. So we don't need camps. We don't need to. So this is what I mean. It's the right location, and it's the right type of mineralization, because in terms of processing, we need to do some more metallurgy. We've done some preliminary metallurgical work, but now that once we get all this drilling, And we're going to get some samples from the zones, the different zones that are representative of the mineralization, because we don't want to just pick up a sample from here or there and do some mineralogy and come back and say this is what it is. We want to be able to have something that it's reliable. It's representative of the zone, and we come up with the right numbers. We've got some top of the line consultants. For example, Don Haynes is one of our geologists who did the 43-on-1, the initial 43-on-1 report on the deposit that is going to production right now. We've got a metallurgist that worked there. So we're using the SGS, which is the largest assay company in the world, basically. So we've got some very
you got all the right people. Now, Tom, I want to ask you. Okay, so what's the path forward to creating value here? What are the upcoming milestones? I think you mentioned in a previous interview that you expect to have a resource by when?
Jack, what our plans are is simple. We're gonna, in the next few weeks, we're gonna get all these results from the initial drilling, and mostly the results from the target 4 area, basically. We're looking at hiring an independent mining company, an engineering company, to come and review all the information, and give us an independent NI 43-on-1 resource report. And we're expecting that if everything's work out, because we need to get this drilling results first before we get this resource, we're hoping towards the end of this year or January. So if we have it our way, it should be this year. So that would be our maiden resource, where if we have somebody, an independent engineering company, look at it and say, here's what it looks like in this zone, because in half of the property we have 8 zones like this, and we only looked at the one. But so there's a lot of upside, but we'll concentrate on this one, the target 4 area. And then basically after that, we want to do a preliminary economic study that will take another few months, 2 or 3 months, I hope, depending. The industry is busy right now. That's what we're hoping. And then basically after that, we're based on all these results, we could potentially go into a pre-feasibility, get into a more detailed study. We're going to do more drilling, because the way we drill this, Jack, is on the main zone. As you see on the map, we drill on every 100 meters, basically within 100 meters spacing, and then outside of the zone is 200 meters spacing. If you go back on the map, when we get into a pre-feasibility stage, we're going to drill holes. We're going to maybe drill it in 50 meters or every 25 meters or 50 meters. So we're going to do more drilling, so more metallurgical work and all this.
Okay. But the end goal is what? Once you have, let's say you get to the feasibility study, at some point, are you going to maybe bring in a partner or sell the product? Like, how do you extract the value from this? You're not going to be mining, right? You're not going into production. That's not the game plan. Right?
Jack, there's a lot of demand for projects like this. As I mentioned, most of the ionic clay type deposits are in southern China and the surrounding area there. There is one project that is being developed right now in Brazil, in the same area where we are. And there's another project that is being developed in Africa, or at least in the development stage. As I mentioned, the grade for the one in Brazil, the average grade is 1,200 parts per million. The average grade, the one in Africa, is about 550, 600 parts per million. If we can really demonstrate to the market in the next few months that we've got something that it's high grade, it's in the right area, there will be a lot of interested parties. And we can look at bringing a partner, we can looking at selling it, we can looking at different options, or down the road, some sort of production.
Let's get to the kind of what investors want to know, or for the layman in the audience. Let's say things continue as is, right? Let's say more or less you keep getting the same results. I'm talking about the medium results, not this week you had like these blowout crazy numbers, which are like 20 times, the
right. No, the average, the average.
Yeah. let's say you keep getting to the average. What is it? The 1,200 parts per
Well,
minute,
no,
whatever it is.
the average that we the weighted average so far on the 17 holes that we've got is 1,566 part per million.
Okay.
That's the average grade.
Okay.
That's without taking into consideration this high grade zone
Oh,
hole.
okay.
And, okay.
And that's still better than some of the commercial projects out there. So let's say you keep getting these results, right? You get to the maiden resource. What would be the value of this? Let's call it by, listen, we're not gonna think 2 years out. Let's say by January, right? You have the maiden resource in January. What would this be worth? Let's say you have, again, based on these, like in the market, like what's an asset like this? What would it be worth based on just the maiden resource? We're not talking about just at that point when you have
Jack,
that market.
that's the few $1 million question, right? I don't know what it's going to be worth, but what I'm
It's
thinking,
the cost.
my thinking is, as we come up with more results, as we come up with a resource or an independent resource calculation, the industry, the investors, and the sophisticated the industry will look at this and will, because right now they've seen some numbers, as you said, and I think the value of this project and potentially the shares will be a lot more than that. There's another company that has a similar project in Brazil. They're further advanced than this project because they have a resource. They have an initial resource, and they have a market valuation of 500 million Australian dollars, right? So we have a market valuation of 25 30 million, right? So there's a lot of upside here. There's a lot of blue sky, but the market is the market. I strongly believe that if you have a good project, there's a market. There's a lot of interest. There's more money than good projects out there right now, right? If you have a viable project, because this kind of deposits, they don't happen every day, Jack.
Yeah. So really, okay. So there is a path. Again, 2 months away. We're potentially 2 months away from this maiden resource. That's the plan, is to get it by January, and there might be a multi-bagger in the stock by then. Once you get there, potentially. We're not saying it's, but potentially, if you keep getting the
But
same rate.
potentially we should have a lot more value than where we are here if we can really, if we can come with good results like this. And I don't want any inspectors to think, the investors to think that we're going to get every hole will have this kind of 27,000 ppm, right? I mean, that's not, but what's exciting is we're going to have that we end up with a very good grade, overall grade, and potentially within this wider zone, there's some high grade sections that you can really develop first, get your money back, or whoever develops it, recover all your costs, and then come up with profits. So okay. I see a lot of, based on what we've seen so far, it's highly unlikely that, and I've been in this business for about 30 years now, it's highly unlikely that you go into a project and you drill 130 holes and the first 17 holes come out all good grades and good mineralization, right? It's not, so we've got a good feeling about it. We think we've got a good possibility here of coming out with something that is it's sizable and world class.
Okay, that's an interesting point. So the first 17 holes, they've all had basically commercial grades of rare earths,
right?
So that's which is pretty good, right?
100% success. 100% success with good grades, doubling the width of the zone, the depth of the zone, because initially we knew that the zones were basically 7-8 meters. Now we know the average with the first 17 holes is 13 meters. With this new high grade hole onto the west, the depth is at least 24 meters. So things are looking very, very good.
Very interesting. Okay, but let's also add, so what's interesting about Appia, I'm always mispronouncing it, Appia, but Appia. Okay, so I'm never going to get it right. But anyway, what's compelling about Appia is that this is a play with there's multiple shots on goal. You have this. You also have, which I think is not getting any value right now, but it will, I believe, soon, is your uranium project, right? So can you tell our audience about also the uranium project that you have and what the possibilities there are?
Jack, Appia has 4 uranium properties in and around the Athabasca Basin in northern Saskatchewan. This is a exploration projects where we're looking for, the model is high grade, near surface, near infrastructure uranium. We're very close to Cameco's mines. The mines are in production there on 3 of those properties. We're also in Saskatchewan, we have the Alces Lake project, which is a high grade critical rare earths in monazite. This is a hard rock project that we have done quite a bit of work. The last few years, we drilled 40 diamond drill holes over this summer, and results are pending for that too. So that's another project. But in addition to that, we have this large area in Elliot Lake, which is a past producing, a world-class producing mining district. It produced over 300 million pounds of uranium and also produced rare earths. And we have a resource there, or we have a historical resource of 200 million pounds of uranium initially, based on historical information. That's not a 4301 resource or anything. It's based on historical numbers. But the resource that we have, the 4301 resource is about 55 million pounds of uranium in inferred and indicated category, and about 180 million pounds of rare earths. That's in Elliot Lake, Ontario. All the infrastructure is in place. The 7-8 mines produced there for 30, 40 years. And this is a world-class resource, but it's on the lower grade. But now that uranium prices are going up, and also rare earths prices are going up, this could be very exciting. And we're looking at revive the exploration, or what we're going to do with that. Because uranium prices in the last couple of years went from below $20 to about over $70. It's getting to the point where this thing gets very interesting.
And what the number where this becomes a viable project is what, about $100 a pound for uranium?
I would say $90, $100. The last time we did this resource calculation was at $80. But in addition to the uranium, we've got 3-4 pounds of rare earths in there. You put all the numbers together, but I think give and take $100, I think that this makes it very exciting.
Yeah, and I've seen reports saying they're expecting uranium to go north of $200 a pound. There's potential for that. There's uranium. They're not going to get the electricity they need for all the EVs, for everything, for the modern age, without building nuclear plants. And I think Russia controls most of the uranium. So the uranium really is going to be, I think that could be the next bull market.
Yeah, the main producers are basically Kazakhstan, which is under Russian control, Canada and Australia, basically. That's the main uranium producers. The last time the price went up to $142 at the time. That was 10, 15 years ago. And so, yes, the market thinks, or the projections are $150, $200, or over $200 uranium per pound. And it could be, they could be right, because as you said, we need a lot of energy, and uranium is right now it's mainly used in generating clean energy, clean electricity, and we're going to need a lot of that, or the world needs a lot of electricity.
Tom, we got an interesting question here from Bremer. He's asking, so when will the 2 business areas, which is the rare earths and the uranium, what do you think of spinning out one of them? Because that would unlock value.
We could consider that at some point, Jacques, but it costs a few $100,000 a year to run a public company. And you also need the people, right? You need to split the team and all this. As soon as we see an opportunity, I think we can really consider that. For example, once we see what this PCH project in Brazil looks like, there might be a time where we're saying, here, we've got a situation here where this can go by itself, right?
But so it's on the table. In other words, your goal is to create value for shareholders. You're one of the biggest shareholders, right? So the idea is, obviously, as soon as if the timing is there, it's on the table.
But it's always on our mind. It's not. We're always considering this option. Yeah. But as I said, it's just a question of cost and also getting a new team and all this.
Sure. Okay, Tom, let's wrap up on this. So bottom line is there's a lot more drilling results to come. We're expecting potentially this maiden resource in January. So that's 2 months away from right now, so we're getting very close. Near-term catalysts in place for this potential multi-bagger. Let's wrap up, Tom. I want to close out on our favorite question for anybody that's new in the audience is, in your opinion, Tom, what are the top 3 reasons why investors should consider Appia Resources today?
Jack, the world is undergoing this transition to clean energy. So rare earths, critical materials, rare earths and uranium, they're in high demand. They will be needed, especially in the next few years. The prices, projected prices are on the upside. So we're in the right area. Appia is involved in both uranium and rare earths. We've got, and also Appia, I think, is the only company that we know, Canadian company that we know that is involved in both in hard rock rare earth projects and in ionic clay type projects. Both our projects, especially the Brazilian project, has both heavy and light rare earths, which are in high demand and will be in also higher demand. And based on the information, the drilling information and the exploration that we've done so far, this looks very exciting. This project in Brazil, the one in Saskatchewan looks very exciting. The uranium project looks very exciting. We're in the right sector and we've got the right projects. And we think that the next few months in the short term, there'll be catalysts. There'll be more information where the market can really clue in more what's going on, what we have. And that, I think, would be exciting because we can give more for investors, basically, because once they've got some more information here, they can really see that their value is exciting. It's great value in Appia's shares.
Tom, you want to grab one more question here from Dimitri? He's asking, what could the ore value from the rare earths project, what would that be per ton with the grades that you're getting, the average grades? Let's
okay. What every project is different, right? But let's see what we know so far. The most Chinese projects, as far as we know, the highest grade that they have there is 700 parts per million. So there's a lot of Chinese ionic clay projects in China. As far as we know, the highest grade they have there is 700 parts per million. There's a project in Africa that is undergoing construction in Uganda, Africa right now. Development. It's undergoing development. Their average grade is 550, 600 parts per million. That's another project. There is a project that is in Brazil that we know is being built and is going to be commissioned in the next few months. The average grade is 1,200 parts per million. So I would say anything above 1,200 or anything about 1,000, but depending on the leachability, how easily the rares are leachable, it could be even lower. It could be 600 parts per million. But we like to see for ourselves, we like to see it above 1,200 average weight grade to get comfortable.
Fantastic. Okay, Tom, on that note, I want to thank you for the latest update. Thank you, everybody, for joining us today, the great questions. And we'll see all of you on our next live stream, probably right after the next drill results.
Jack, thank you again. And I would like to tell you that we were receiving assay results every day now, a lot of results. So in the next few weeks, we'll be getting a lot more results out. Investors should get more information in the next little while here. So it's fantastic. Very exciting.
Okay. This is what the market likes. A lot of near-term catalysts, for upside potential. Okay, Tom, thank you again. Thank you, everybody. And we'll see you all on the next one. If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework a proven 10-step system for finding those stocks, which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10-bagger blueprint on Amazon, and here's to your 100x.